Chapter 16, A Financial Swiss Army Knife. This is where the IBC banking alternative we've been discussing comes in. Remember that max-funded, dividend-paying whole life insurance policy? It's like a financial Swiss Army knife. It allows you to do multiple things simultaneously with the same dollar. 1. It earns tax-free, uninterrupted compound interest when structured properly. 2. It gives you hassle-free, unrestricted access to working capital without any fees. 3. It is available for potentially funding passive income investments. 4. It creates tax benefits when properly designed. 5. It provides an income tax-free legacy death benefit. 6. Used as a source of supplemental tax-free income when properly designed. 7. Gives you totally unstructured loan repayment options. Think of it this way. IBC is not an either-or asset, it's a both-and asset. Using it lets you do more than one thing simultaneously. You don't have to choose between doing this thing or that thing. By using this tool, you can demonstrate good financial stewardship to minimize lost opportunity costs and maximize your financial efficiency. It's how you can be more certain of each dollar benefiting you rather than somebody else because your dollars routinely work in multiple places simultaneously. Now, let's talk about everybody's favorite subject, taxes. Here's a question for you. Would you rather pay taxes on the seed or the harvest? Most people would choose to pay taxes on the seed because it's the smaller amount. But here's the catch. With qualified accounts like IRAs and 401ks, you don't have that choice. You give up that choice to get a tax deduction up front, but you'll pay taxes on the entire accumulation of money, the harvest. Every dime of your distributions is taxed at the ordinary income rate, the highest and most costly possible. It will also be at an unknown rate sometime in the future because tax rates in the future are totally out of your control. This is why a Roth IRA account can make good sense tax-wise if you qualify for one. Think about this. Traditional retirement accounts come with multiple controls such as 1. With very limited circumstances, you can't touch your money for decades at a time before age 59 and a half without penalties. 2. You must start taking distributions currently by age 73, whether you need them or not. 3. You're required to take minimum distributions, RMDs, based on your life expectancy, again, whether or not that arrangement suits your then current situation. Miss these rules and you could face hefty penalties. For example, if you don't take out enough for your RMD, you could face a hefty 50% penalty on the shortfall. Traditional retirement accounts are most often invested in the stomach-churning volatility of Wall Street, where there is little to no guarantee you won't lose money. I'm not saying traditional retirement accounts are all bad, but I am saying you deserve to know all your options. Make your financial decisions based on facts, not just on the first story that sounds good. That's why I'm sharing these alternatives with you. It's hard to make informed, educated decisions when not presented with all available options. By understanding concepts like lost opportunity cost and the tax consequences of different strategies, you can make better and more informed decisions. You can take control of your financial future rather than leaving it to chance or government mandates. Remember, this is not just about accumulating wealth. It's about using your resources wisely, being a good steward of what you've been blessed with, and creating a legacy that can benefit future generations of your operations yet to come. As you think about it, keep in mind the comparison and contrast of traditional retirement options with the concept of financial freedom you've been introduced to previously. Using IBC as a volatility buffer. This strategy only works with non-qualified accounts, the ones that are not tax deductible, and those not subject to government mandated distribution rules like 401ks or IRAs. Here's how it works. When the market takes a downturn, instead of taking a distribution from your investment accounts while they're already at a loss, you use your IBC policy we've been talking about. When they are structured properly, they can provide you with easy access to income tax-free distributions. This allows your investments to recover without being depleted further during market downturns. Remember, or maybe realize for the first time, that you have to get a 25% return to recover from only a 20% loss in your investment just to get back to break even. Think about how much risk you have to accept to get a 25% return on your investment in the first place. It rapidly gets worse to try to recover from steeper losses until a 50% investment loss requires a 100% recovery just to get back to break even with no gain whatsoever. Suffering an investment loss in the early years of any distribution adversely affects the losses even more severely. Next up is pension maximization. If you're dealing with pension distribution options, the single life option provides a higher payout but stops entirely at death. There are several joint and survivor options that all initially provide reduced payouts but continue to the beneficiary. Your IBC banking alternative can provide a better solution. When it is structured properly, you can comfortably choose the higher single life option. Your IBC account can provide the survivor benefit for your beneficiary, income tax-free, far more efficiently. Banks love the security of cash value insurance policies so much, they'll sometimes lend you money at a lower interest rate than the policy itself offers. This is called third-party loan. For example, imagine borrowing at 3% from a bank using your policy's cash value as collateral to pay off a 7% vehicle loan, or using that 3% loan to invest in real estate yielding 15% or better. That's financial efficiency in action. It's called financial arbitrage. You still have to deal with all the bank's regular loan conditions, but you might get access to a lower interest rate. Just keep in mind what you have already learned about interest rates compared to interest volumes. In a recent Jared Sorensen Ag Steward Summit, a poll showed that two of the most desirable operating priorities for regen operators are increasing profitability and succession planning. These illustrations coming up also show proof of my promises in this ebook that both of these objectives are easily achievable and profitably attainable. Both of these are core benefits to IBC accounts. They give you massively increased profitability because they enable you to recapture the interest and fees banks are taking from you now. And they add uninterrupted compound interest, income tax-free, to the equation for your benefit, as well as for as long as your account remains active. Remember how much smaller the interest rate is that the banks want you distracted to focus on compared to the interest volume? This increased profitability comes without you spending one more dime of money. Just take over the banking component of your operation. It's not difficult or complicated. It's just off most operators' radar. Legacy benefits are where IBC accounts are head and shoulders above the alternatives since they are built on a life insurance chassis. With IBC, the legacy benefit is guaranteed to be delivered not only in cash, but income tax-free and for literally pennies on the dollar without the use of fiat fractional reserve banking money ever. Yes, the numbers on pages 98 through 103 below will be confusing, so I circled and numbered some to give you clarity with the IBC concept. 1. Total first-year deposit premium. 2. The guaranteed first-year cash value available. 3. The increased cash value from that year's deposit premium, including dividends. With mutual insurance companies, you are a part owner of the company. When the company generates profits, The companies we work with have done this for more than 100 years straight. The dividends are your share of the company's profit based on the business you do with them each year. This is just like the dividends generated by doing business with your local co-op, with the advantage that here they are tax-free. 4. The total first-year legacy benefit, including dividends. 5. Already in year 4, this shows that your cash value is increasing annually by more than the premium deposit you make that year. It will grow bigger every single year, too. 6. Already by year 6, your total cash value exceeds all cumulative deposits made. This is called break even. This can be changed somewhat depending on your overall objectives, too. Ask yourself this question. When your operation originally started, how soon was all of that original capital investment fully recoverable in cash? 7. All contracts complete at age 121. At this point, the insurance company guarantees to have cash available to cover the contractually guaranteed legacy benefits, which includes all of the cash value. You will see the numbers that guarantee to back this up in the illustrations shortly. Remember the cash value graph? Insurance companies are not legally able to use fractional reserve banking like traditional banks, so this benefit is paid in cash in full with 100 cents per dollar. 8. Contractually guaranteed legacy benefit. 9. The total legacy benefit including dividend value. The outcome is what backs up God's plan for multiple generational wealth building from Proverbs 13:22, saying a good man leaves an inheritance to his children's children. By the third generation, this is exactly what that looks like with IBC. With the illustrations coming up, I'm going to show how 3 generations of IBC accounts are in complete alignment with God's intention for multi-generation wealth building from Proverbs 13:22. First generation, George, starts a plan at age 57 with $50,000 per year premiums, purely optional for illustration's sake only. If his legacy claim occurs at age 82, he has paid cumulative premium deposits of $1,071,012, and the second generation, Bob, receives a legacy benefit of $2,524,094 cash, income tax free. This is 42.4 cents per dollar. As the second generation, Bob, now starts his plan at age 55, using the proceeds from George's policy to seed his account's capital. Assuming his claim occurs at age 85, Bob has paid cumulative premium deposits of $3,489,280. His account delivers a legacy benefit of $10,105,047 cash, income tax free, to the third generation, Warren. This is 34.5 cents per dollar. At this point, the third generation, Warren, starts his plan at age 50, also seeding his account with Bob's legacy proceeds of $10,106,047. At age 80, Warren has paid cumulative premiums of $6,848,721. His legacy benefit would amount to $21,451,456 cash, income tax free. This is 31.9 cents per dollar. These illustrations will also show how 2 of the most desirable operating priorities of regen operators, increasing profitability and succession planning, become feasible, profitable, and highly likely. They show how IBC delivers what God intends for multi-generational wealth building found in Proverbs 13:22. Just imagine what your operation would be like today if you had been the beneficiary of multiple millions of dollars, income tax-free, because previous generations of your operation had been using their own IBC accounts. No, you cannot change the past, but you can make certain that yours is the last generation that does not have these same benefits and gets to enjoy them fully in your own operation too. Keep in mind, this is in total alignment with God's intention for multi-generation wealth building. Make sure you're working with an experienced IBC advisor of highest integrity. Now that you have seen illustrations showing how you can implement what Proverbs 13:22 directs to create multi-generational wealth in alignment with God's will, ask to see custom illustrations to see whether your specific numbers would make sense for you to implement IBC in your operation. Just imagine what your operation would look like today if you had been the beneficiary of multiple millions of dollars income tax-free because previous generations operated on an IBC platform. No, you cannot change the past, but you can make certain that yours is the last generation that does not have these benefits while enjoying them fully in your own operation. Keep in mind, this way of doing business is in total alignment with God's design for multi-generation wealth building found in Proverbs 13:22. Make sure you're working with an experienced IBC advisor of highest integrity to do this correctly so it is truly designed to optimize your best interest. This is literally a regen operator's dream come true. Just imagine what your operation would look like today if you'd been the beneficiary of multiple millions of dollars income tax-free because previous generations of your operation had been building biblical wealth using IBC. This would mean knowing that with certainty that each succeeding generation will have their turn at building biblical wealth with the even stronger financial foundation they're starting from. This is found in Proverbs 13:22. A good man leaves an inheritance to his children's children, but the wealth of the sinner is stored up for the righteous.